All right, everyone. Thank you so much for joining us here today. Good afternoon and good morning, depending on which coast you are located on. My name is Sarah Vogt. I am the manager for the MSP and cloud practice here at Sophos on the East. We appreciate you guys taking the time to join us today. We are excited to present this topic. It seems like it is definitely relevant and resonating with all of you. So without further ado, I'd like to introduce Nicholas Kramer, who is the Senior Director of Global Cyber Risk and Partnerships here at Sophos, as well as Greg Rosenberg. Greg is the Director of Sales Engineering for our Managed Threat Response practice, as well as our Incident Response practice. So thank you so much. We are going to ask that you use Q&A to ask questions. Um, and then the chat will be manned, but not as closely as the Q&A. But thank you for your time, and we'll go ahead and kick things off. This is going to be
speak with you today. So as Sarah said, I'm the Senior Director for Global Cyber Risk Partnerships at Sophos. I joined over the summer. I've spent about the last 15, 16 years directly in the kind of cross section where cybersecurity meets cyber risk, AKA cyber insurance. And when I joined, I was specifically joined to help kind of grow our relationships and grow the different opportunities that we work with directly tied to that carrier market. So today, what we wanted to do was walk you through a little bit of kind of a game plan for understanding what's happening in the current cyber insurance market. Some of you that may have spent some time placing policies recently, renewals, that sort of thing, might have noticed a market change in that experience. And there's definitely, I would say, an interesting time for cyber insurance right now. But luckily, there's some things that you can do, some of the things that Sophos can help out with that can, help that process go a bit smoother. And so Greg and I are excited to talk to you about it today. So without further ado, I'm just going to jump right out and put it out there. Cyber insurance is getting tough right now. It's absolutely getting tougher to get coverage. And that's the unfortunate news, right? So up until now, and I say now, really the last kind of 3 years, cyber insurance has been characterized by what's called a soft market. And 3 years ago, we really kind of hit that cross section where we moved over into what's called a hard market, specific to these standalone policies. And what that essentially means is that, the payouts are rising faster than the collection, right? So capacity, which is all that risk transfer out there, that's shrinking. And, premiums are going up, payouts are going up. So essentially the economics that kind of balance the whole market are moving into this balance where it's really kind of thrown off, right? So we're seeing loss ratios spike like crazy. In fact, for the last 2021 will really be the fourth year in a row that we've seen it. In 2020, it was a 72.8% loss ratio for the market as an average, which is absolutely crazy. So if you know what a loss ratio is, it's essentially when you take the dollars that you collect in premiums and divide them by that payout, right? So you always want to be collecting more than you're paying out, and a 100% mark would basically mean you're breaking even, right? I just saw a report yesterday. Two of the top largest carriers globally, certainly two of the top largest in North America, have above 100% loss ratios right now. So they are actually losing money in cyber insurance, which is absolutely crazy. And a number of factors are really leading to this, right? So first and foremost, this is a still relatively new insurance line. It's been around, some of the old school folks will say 20, 25 years. They used to call it like privacy stuff in the late 90s. But really in the early 2000s is when we started seeing standalone cyber. And it really didn't start taking off until really kind of 2010, 2011. And then in the early 2000 teens is when we started seeing it, just really kind of evolve into, one of the largest professional lines. So there is limited loss history. The second thing is we've seen this increase in ransomware attacks. And again, ransomware kind of came from nowhere, really, again, that same type time by 2015 was really becoming a problem. By the time we get to 2017, it's the leading loss type. And so, again, this I think, caught people really off guard. And the costs to recover are continuing to go up, right? These things are becoming more and more costly as the threat actors, get more and more complex and more evolved in terms of what they're doing. It's taking more and more to kind of untangle that. And then last but not least, we've got the pandemic, right? So the pandemic shot work from home way up, and just introduced threats that a lot of businesses, quite frankly, just weren't ready for. So again, the net of this all is really just, we are now seeing that the losses are in some cases outweighing what's being collected. So this is going to directly relate to your experience in getting any type of cyber coverage. So hopefully, when we're done here, we'll kind of show you some ways to be strategic about how you can kind of leverage what you're already doing with Sophos, or leverage what you're going to be doing to make that process a bit more easy. So,
Nicholas,
yes.
sorry, before you move on, we have two questions that came up. What exactly does cyber insurance cover typically? And I feel like this goes along with what you were just talking about. The bad actors seem to understand the economics of their craft. Do you think they will reduce reduce pricing so that the insurance company loss ratios go back to the right side up?
Yeah, so great question. So with respect to the first one, what does it cover? I'd ask that you just take maybe like a 5-minute break on that one, because I've got that coming up in one more slide, a slide dedicated to that, and I think it'll make sense if we kind of tell this story in that context. So I'll definitely get to that. But the high level is, it pays for losses relating to cyber events. And again, don't worry, we'll get much more specific, but I do want to answer that on the slide. With respect to what the kind of the macro response is to the current market situation, there's a lot of things happening, right? So right now you have a concerted effort by the Department of Treasury, Office of Foreign Assets Control. They're doing some things in terms of restricting companies' ability to fund the ransomware groups, specifically if they've on the sanctioned list. So the Department of Treasury has this OFAC list, which designates sanctioned individuals. And so, they're stopping payment going to those guys. They're doing some stuff in terms of their controls that allow them to better recoup losses, specifically with crypto. So that sort of thing is happening. But yes, absolutely, we're seeing premiums increase like crazy. And at the end of the day, there's only two things that can really happen if you take regulator involvement outside, right? So we can either get better at cybersecurity so that we are stopping more and more of the attacks, or the cost of that insurance goes up, right? Those are really the only two ways to get out of the current market outside of regulator involvement. And ultimately, I think what we're going to see is a balance. And I think that is what we're seeing, right? So after you're done listening to this today, I think you'll see very clearly that the carriers are taking cybersecurity very serious, and they're requiring certain controls now to even obtain a policy. So I think that's what we're going to see. That's kind of what's going to help out. But certainly the cost is not going to go down, right? Not anytime soon. At some point, we will reach that equilibrium where the controls catch up, and then the carriers begin competing on price again, because there's more of it out there. But we're still years away from that happening. Greg, was there anything you wanted to add to that? I feel a little obligated here to involve your bright mind in that, but I think that probably covers it from my side. I mean, any thoughts there?
Yeah, I think, broadly speaking, I've always conceptualized it as three options for an organization. There's risk acceptance, there's risk transference, and there's risk mitigation, right? And I think, especially in our world, there's a lot of risk acceptance, but I think that in parentheses, it's really risk ignorance is what it comes down to. Like, people are not necessarily always placing policies because they don't know the availability or the need for it. And they're also not necessarily mitigating threats as best they can because they don't understand the threat landscape. I think the biggest challenge that we have to talk about here is this notion of risk acceptance, not doing mitigation or buying a policy to help transfer it. And so it's our job to kind of address the threats and the current landscape here today. So hopefully we can just make sure we guide people through those three choices.
Yeah, thanks for that. Thanks for that. So let's actually talk about, what we see from a claim standpoint, right? So this is a 2020 report that was using 2019 data. Obviously, we're going to be getting a new one here very soon with 2021 data. I don't think we're going to see much of a change. There will be some movement, but again, I think the highlights, the takeaways are going to be largely the same, right? So first and foremost, Net Diligence is a group that works with a bunch of different carriers, a bunch of different ecosystem providers, and so many different entities kind of submit to this claim study. So it's fairly well balanced. But you can clearly see that, by a number of claims, ransomware really leads the pack, right? Now, the average claim is not necessarily as high. So meaning, the average claim per attack source, which you can see hacker, leads the way for being kind of the most expensive. These are a bit broad terms. I think that's done by design because when you start to kind of really carve it out, what can a hacker do? Like this thing is just going to get a bit messy, right? So functionally, ransomware is, different than a social engineer. Ransomware could be the result of social engineering. It's obviously could be the result of a hack, but the way they categorize these is a little bit different by design. So in this case, ransomware would be a successful ransomware deployment. And again, far and away, it's the number one a source of claims. And I think we're going to see that same thing in 2021. Now, I think some can be said for what we're seeing in terms of the demands and the payouts. So we have seen a movement downstream by the threat actors, right? So larger entities, public entities, municipalities, school districts, cities, that sort of thing, right? A couple of years ago, that was really kind of where these folks were going because the controls were weak and it was easy to get to and they could get fairly big payouts. But in this last 2 years, we've really seen a shift kind of down market. A lot of professional services firms, CPAs, doctor's office, dentists, and then even just small businesses, manufacturing companies, that sort of thing, really has kind of shifted in terms of being the primary types of organization that these folks are attacking. And so with that kind of movement downstream, obviously comes a big opportunity for a company like Sophos, which does work so prevalently with SMB organizations. So again, just a small little kind of taste here of how they're categorizing these loss types. Don't want to get too lost in this because I do want to answer that question from a few moments ago, right? So what does cyber insurance cover? And so, there's going to be some degree of variability here, right? Because sometimes you can get cyber insurance or components of cyber insurance as a cover to additional insurance, right? So, you may have some core type of professional liability, but you add on some degree of specific kind of cyber coverage to that. So it's not really like a full policy. You may cover, let's say, specifically something that is hardware oriented. If a hacker gets in and bricks up your devices, it'll pay for losses related to that actual hardware, right? That's one example. Another example could be just, if you're paying for extortion, cyber extortion, if ransomware is really just the demand and you're looking to transfer that risk specific to having to pay out a ransomware demand, there's also coverage for that. But again, let's talk about it from a comprehensive standpoint, right? So what you're going to see here on the right is this box that talks about first party and third party risk. That's the basic kind of dichotomy with any sort of cyber policy, a real actual cyber policy. So on the first party side of the coverages, those are going to be things that are directly related to you making yourself whole again, right? So think like the forensic analysis, the incident response, right? To identify the attack source and then isolate that threat and then remove the threat actors, right? Like I said, the ransom demands and specialists that you hire to negotiate with the bad actors and fund the payments, that sort of thing. Cost to regain access or restore from backups. Legal costs, one of the most core components to any incident response is going to be the legal guidance. It's an important piece, and so that's one of the main first party coverages. If you're a large enough company or you're involved in the right type of areas and you need to think through public relations, that's another type of cover, another type of coverage that you can get on these policies. If you breach data, right? So if the threat actors steal data and that data is regulated at the state or federal level, and you have to notify regulators or notify consumers, the cost of that notification is going to be covered, meaning, actually printing out that mail and sending it, protecting folks with credit monitoring, dark web monitoring, that sort of thing, right? So these are all those first party coverages, and generally those are going to be sublimited, right? So let's say you have a policy for $5 million. For most SMBs, that's a pretty beefy policy, right? In fact, it's probably almost too beefy for most SMBs, right? So maybe think like 500,000. That's probably a bit more average. You may be getting 500,000 of aggregate cover, for $500-600 a year, or something like that, right? Well, those first party coverages are going to be sublimited. So there may be $100,000 sublimit for the lawyers in the incident response, right? So it's another kind of important key distinction to note, is that generally those first party coverages are going to be sublimited. On the third party side, those are going to be coverages that are involved in defending and making yourself whole from things like regulator fines or lawsuits, right? Whether it be class action or individual. And those third party coverages, those generally roll up into the aggregate limit. It's only really those first party losses that get sublimited. Now, one of the biggest things here, and I always try to make this a point, is that you see down there in that box that talks about business interruption. So business interruption is sometimes included. I would say maybe 3/4 of the time it's included in these policies. Else you have to pay for it, separately. But this business interruption is really what directly ties back to your ability to respond, right? So forget for a second your ability to defend, right? Your ability to be ready. But this comes when you actually have the attacker, make a concerted effort in. Your ability, when they've gotten in and that there's a loss, your ability to respond. The longer that takes, the more those coverages are going to pile up. Sure, it's nice to be able to transfer some risk out and be made whole for some of that, but it's very easy, to see a company that's been down for a week or 2 weeks as the result of a ransomware attack. So business interruption is definitely something to pay close attention to. And again, that maps directly back to the team you have in place to help make you whole in the event of a successful attack.
Hey, Nicholas, there's a relevant question that I think just came in that I'd like you to address. There's obviously different stages of legislation, both here in the Americas and in Europe, that talk about reporting requirements and then subsequent fines for not reporting in a certain amount of time when some sort of incident takes place. The question is, has it actually been tested whether or not a policy would pay out fines for non-reporting in those situations, or what's your thought on that?
Yeah, sure. So definitely, right? So the North American landscape, yes, is very different than the European landscape, which is very different than the Asian, et cetera. Over in Europe, you have GDPR, which really was kind of the first attempt at putting together a comprehensive, think national, think stretching boundaries, right, specific to the EU. It was an attempt at bringing everybody up to the same levels of control, the same obligation, and then also the same punishment, right? So with GDPR, there's fines that are directly tied back to your revenue as a result of, non-compliance. And so there have absolutely been instances where, the regulators over there have gone after entities for fines. In terms of what that coverage pays out, that's a little bit trickier to get to, right? Because that's generally not made publicly available unless it turns out to be one of these big kind of knockdown, drag out lawsuits. Now, we've seen that on the US side, most certainly, right? That happened with Sony PlayStation many years ago. It's happened with big managed care health plans. In the US, right, it was generally, kind of an ambitious regulator that was looking to make an example out of an offender, right? That was largely what we've seen in terms of the types of companies that they go after to make examples of. There's plenty of other instances, much smaller, let's say $25,000, $50,000 fines, specific to the business or the federal regulator that you may be regulated by. Healthcare is a good example of that, right? Like a lot of healthcare entities, whether you're on the payer side or the provider side, there are going to be obligations that you have to notify. And those fines are generally less severe, but they're absolutely happening, and they're happening with some degree of regular frequency. And without a doubt, these insurance policies are paying for those types of fines. Now, there's obviously going to be exceptions. The lawyers that write these things up, that write these forms, these insurance forms, the actual coverage, they're crafty with their language. And so if there's negligence and gross negligence led to the non-compliance, the failure to report, and it wasn't something, let's say, that just kind of cruises through the policy verbiage a bit more easy, then absolutely the carrier may choose to fight it. We've seen some example with that in California with the CCPA, which is the California Consumer Privacy Act that was launched a couple of years ago. That was kind of the GDPR approach in California. We've seen a couple other states introduce similar bills into their legislatures. So it's beginning to happen with more kind of uniform certainty, but right now it's a little bit of a hodgepodge, a mixed work. But the one thing that definitely is true is, yes, these policies do pay for that, right? It just, again, you have to kind of compare and contrast specific situations to determine, why they did pay or why they opted not to pay. Hopefully that answers the question.
Yeah, I think it does. And I think, sometimes what gets lost in the question is the intent. And I think they're kind of speaking to some of the more recent legislation that's working its way through state houses and Congress. And that's, we need to know about an incident within a short amount of time, right? We're talking about hours or days, not weeks or months, so that victims can essentially themselves try to make themselves whole. That's kind of the intent behind it, because you do have some victims that try to obviously, obscure what has taken place. So, just be mindful of it. We can't tell you which way to go here, but just be mindful of it, I guess, is the overriding guidance.
Yeah. And sometimes too quick is not the right answer, right? You may not have a fully formed understanding of what's even happened if you're a day or two, after learning of the attack. So the last thing you want to do is get misinformation out there too. So it's a bit of a slippery slope, but that's kind of where, I think, to Greg's point, the intent comes, right? If you're being upfront and showing a willingness to comply, but also offering caution where caution is warranted, I think that can go a long way. So let's dive for a moment into the prevalence of cyber insurance here. Is it? Yep, there we go. I forgot I had a little animation on that one. So, this is going to vary widely, right? And so what you're seeing here is 84% of organizations have cyber insurance, right? Now, this is based on a report that we had funded via an independent research house. And I think this was it was like a year and some change ago, right? Now, 84% is extremely high, right? Let me break this down to you. This was some of the findings country by country. All of these countries are even quite high. Depending on who you're going to talk to, estimates may be as low as let's say in the US, for instance, as low as in the mid 30% range in terms of kind of total companies that have some degree of cyber insurance protection. And then you might get some that go up a bit. The thing that was interesting here is that, this was a survey of IT professionals, right? And so, I don't know what conclusion necessarily to draw from this, but it could be that, right, these IT individuals think that they have some degree of cyber protection, but may not actually fully understand if it's cyber or if they have what's called silent cyber, or they think they have silent cyber, which maps back to general liability, right? This was one of the big arguments 10 years ago, was like, hey, how much of cyber is actually covered in other parts of your general liability? professional liability, right? AKA silent cyber. The verdict is really kind of out on that. The point is like silent cyber really doesn't exist. It's extremely rare for an organization to be successful in seeking cyber coverage in the wake of a cyber attack through some other kind of professional liability policy. So again, knowing that we've got a mix of folks on the phone here, I offer caution, right? You may think that you have cyber coverage, but you don't. It's certainly not going to hurt to try to take a look at that policy. For Sophos customers, obviously that's one of the things we help do, right? So, we'll get to the point where we talk about some of our services and ways we can help, but understanding what that policy does, that's important up front. And so if you can do this and be proactive to say, hey, do we actually have cyber insurance, that would be helpful. Because my guess here, my hunch here is that these numbers are inflated quite a bit, right? I think that number is much lower. Now, there's kind of a deviation. There's like a 1B to the 1A here, right? And that is, okay, well, you have cyber insurance, but does it cyber insurance pay for ransomware? That's a totally separate coverage in and of itself. Oftentimes it's a separate cover, right? So you're going to pay a separate part of your premium specific for ransomware, right? And most policies are going to be this way. It's very rare for one just to default to have that ransomware coverage. It's usually going to have it, like I said, as a standalone cover with its own limits, its own sublimits, and its own premium, right? So you can see here, there's about a 20% delta. This is that same group of folks that we're answering. So, roughly 20% of them said, hey, they have it, but they didn't have it that covered ransomware. Ransomware being like the main thing here, the main kind of threat vector. Obviously it's important. And we're going to get into some ways that, not just from a technical, from a control side of things in terms of how you can prevent this. There's also, the human, the emotional intelligence piece that kind of goes into it, the training, right, which is going to be very important. So ultimately, all of these things are we're trying to tie this back to part of what better cyber hygiene means for the organization. And so, again, what I'm pointing out here is that I think there's risk. I think a lot of folks think they have the coverage, but they probably don't.
To that point, hey, Nicholas, if I could jump in, we're having a cluster of questions around whether or not we will make recommendations about specific carriers, number one. And the second part is we're having people ask the question, does E&O cover anything here as well?
Yeah, so I'll answer the second question first. No, it's highly unlikely. So again, going back to the part about silent cyber, Google silent cyber, you're going to find thousands of articles written about this. You're going to find very, very few successful case studies written on businesses that have had cyber claims and were able to seek other insurance coverages to pay for actual cyber events. It just doesn't happen, including E&O. So again, I would definitely raise caution there if you're relying on that. The second piece is, will we make recommendations on who to work with? It's not a yes, it's not a no, it's a little bit of a gray area, right? So 2 years ago, right, we could be having conversations about, because you have X, Y, and Z coverages and protections through Sophos, and you've got them deployed across X percentage of your network, and you're doing all these great things. Let's go over here and get your premiums reduced. Those days are largely gone, right? Because again, remember what we talked about at the beginning. People, including Sophos, right? Like our own corporate policy increased this year, and we didn't have any claims. So companies that aren't even having claims that have the same degree of controls are seeing increases because it's just a symptom of the market, right? The market has to catch up in order to get that equilibrium back. So, there are, we don't right now have a list of, let's say, preferred carriers, but there are instances of direct carriers, or what are called MGAs, so managed general agents, right? And so these are entities that generally get permission from a carrier to do their own underwriting, but effectively sell their insurance, right? So they're kind of their own little mini insurance company. And oftentimes through those MGAs, you're going to find them leveraging some degree of technology to do things like scanning or evaluations that are going to go a little more than just paper-based applications. They're actually going to go and say, hey, well, if you've got this protection, it should work. They may run a pen test and see how well you perform. They may do some vuln scans. They may do some port scans. They may, they may go do some interviews, that sort of thing, right? So there are definitely entities out there that do care what your input is, and for those types of MGAs or those types of direct carriers, you're more likely to be able to get the risk transfer that you're actually asking for. So again, you got to really kind of get rid of discounts. Those are, we're just not really talking the world of discounts right now. It's about getting adequate risk transfer, right? So what was asking for a discount yesterday is now just like, hey, we can actually get the coverage we need. And we're going to talk about some of the things that the carriers are doing, by requiring kind of next gen EDR type solutions, or even up in the ante and requiring managed solutions like our MTR, right? So that's happening. And in those cases, over time, we will definitely be formalizing more and more relationships with these carriers. I ask everybody to just give us a little bit of time, right? So this is kind of a brand new initiative for us. As I mentioned at the top of the call, or the bottom of the call, I was, I joined over the summer, right? I do come from the space, but it takes time to put these in place, and in time we will have them in place. And we're also doing some things creatively to try to explore ways in which we can make that easier and make that coverage happen at scale. So I'm very optimistic that we'll be announcing news on this front early into the next calendar year. But certainly stay posted. Sophos.com/insurance for now is going to be kind of the homepage. We're building that out. We're starting to put more resources there. Any updates specific to carrier partnerships and that sort of thing will be promoted and notated at that URL. So please do visit that regularly for the latest updates there. All right, keep it moving. Quick time check. Okay, so we've got about 25 minutes left, and we do want to, I think, leave some time for questions, unless we're getting them in kind of real time. But we'll just keep playing it by ear. Not going to go too much into the industry stuff, right? You can take a quick kind of gander here. I mean, there's nothing too surprising in my mind in terms of where we're seeing more coverage than others. Like I said, municipalities, kind of public entities, they were kind of getting hit, most recently, but we've started to see more of a trend downward into SMBs, but it's fairly well balanced, across the board. So let's kind of move away from, the broader kind of macro look at like who's buying the coverage, and let's talk about the costs that go into cyber. So what drives that awareness generally, and then what are the costs, right? So there's another group called Advisen, and they partner up with a reinsurance company called PartnerRe, and they do this state of the markets view is what they call it, right? They do it every year, and it just happened for 2021. So these numbers are quite fresh. And one of the most interesting things in this particular study is it talks about what that top driver is for the purchase. And I will tell you that over the years, that number one spot there, you can see at 80% news of cyber related losses experienced by others. That has slowly climbed up, right? It's been in the number one spot for the last few years. But as a percentage of respondent answers, that's gone from like, the number two spot at 60, or excuse me, the number one spot at like 60% to now the number one spot at 80%, right? So that continues to get stronger every year, especially over these last 4 years. And that's, of course, directly tied back to just the prevalence of these cyber attacks that we see, in the coverage, right? I still think there's no substitute for experiencing one yourself, right? Anybody that's been through one once is certainly, if they don't have insurance, it's going to be one of the things they're going to be looking into is, hey, are we able to get a policy? Now, sometimes if the claim was bad enough, or if the adjustments made weren't sufficient, you may not be able to get a policy after an attack, right? But there are still, I would say, a reasonable degree of entities, companies that are out there getting policies after an attack. 2 in the same year, probably not. If that happens to you, that's not going to be very good. Probably going to have to sit it out for a couple of years. But certainly one, is manageable. Now, one of the other things I wanted to call out here is the interesting thing. For the first time, number 3, that required by a third party, that it's been up there this high, right? So without a doubt, we're starting to see more and more focus on third parties, right? And we're seeing that, I think, really across the industry, no matter what we're talking about. It's like, hey, do you know who you're doing business with here? The more we start seeing supply chain supply chain attacks, Kaseya being like, one of the big ones that happened this year. That's going to raise the profile for these third party, knowing what your third parties are doing, or are your third parties requiring that you have sufficient cyber coverage? So, the high level of demand from leadership teams, that's something that really has kind of, it's fallen down. I think, we're in like 5th place now at 36%. So it's still important. But as those other factors have kind of steadily grown, that one's dropped down. Still see this as a major hot topic, senior management, board, that sort of thing. We now see these other areas kind of, really kind of driving more awareness within the company than even leadership. So what goes into the cost of cyber insurance? This is also an important question, I think, for everybody to really kind of understand, because when you do get that increase to your premium and you haven't had claims, you're going to want to know why, right? And so there's other things. The more you know about this, the more you can also be strategic about, either the level of awareness that you have or the level of control to mitigate said risk when you're working with your broker, where you're working direct with that agent to get the policy, right? So the first thing that's important for them is the demographics, like the size, industry, sector, location, revenue, those basic kind of things about the business, right? The next thing, which is absolutely hugely important and directly factored into the cost, is the potential exposure, right? So are you collecting PII? Are you collecting PHI? PCI, right? So, just regular healthcare, credit card, all of those have different levels of regulation. And all of those are viewed as different levels of risk, right? They map directly back. So how much of that do you have and how is that collected? Are you storing it? Are you processing it, right? So those are things that are absolutely going to matter when you're looking at your potential exposure. Level of cybersecurity. This one is without a doubt becoming the most important. And of all these things here, this I would say is the one that stands the biggest on its own in terms of being able to influence the type of coverage and then the amount of risk that you're able to transfer out. Without a doubt, that level of cybersecurity is what's going to be most important, right? And again, don't just think of cybersecurity as your endpoint, your firewall, right? Think of it also as your training, your policies, your testing, all of these kind of soft skill type things that are outside of an actual physical solution that are incredibly important, right? You can have the best controls and the best protections, but if you have an employee that's just not thinking correctly and picks up a phone call and decides to give a password or accept the multi-factor push to a threat actor trying to make their way in, hey, all of those controls are gone if they're not being used correctly, right? So again, think of cybersecurity as holistic, not just an actual solution there. History, right? So how much, have you had claims? Have you not had claims? How much do you know about close calls, those sort of things, right? What have you done recently to increase the overall posture of your cybersecurity? And then last but not least, obviously the policy terms. So, limits, what types of coverages, how far reaching they go, what types of exceptions. So those policy terms are also going to be very, very important. Okay. One other thing that is worth mentioning here, when they set these up, there's really kind of two different ways the policies get structured. So one is on a deductible basis, one is on a retention basis. They essentially mean kind of the same thing at the first level. They mean you have to pay some money out before you can get some protection, right? So in both cases, whether you have, let's use this example here, $100,000 policy, but on one of them, it's a $10,000 deductible, and on the other, it's a $10,000 retention. Well, in both cases, you're going to have to pay $10,000, no matter what, to get your coverage. The difference is that one sits within that policy limit, one sits without, right? So deductibles within that limit. So you're really only transferring $90,000 of risk out. Whereas on a retention, you get that full amount. Okay. So retentions are quite popular. I think, in Europe, you tend to see those almost predominantly. Here in the US, it's a fair mix. But those were also going to influence the cost a little bit, right? The amount of deductible or retention, and then whether it is deductible or retention, because at the end of the day, one is giving you a little more risk to transfer out.
Nicholas, we had a question come up that, a lot of clients think that the MSP cyber insurance covers them, and they're asking if we have any sort of documentation on what clients should have and what they should know about coverage as a whole, just to help them walk through those conversations.
And to be clear, I think what they're asking is, does the MSP's policy cover the underlying end customers there?
Yeah, so that's a very, very interesting question, because carriers are scared of MSP policies, quite frankly, for that reason, right? Because the intent, unless it was specifically written, right, as a program, meaning it was built to transfer downstream risk of the MSP's customers, unless it was specifically written for that purpose, it's not going to cover them, right? And I cannot tell you how many times I've had conversations where the carriers are like, look, we had to get out of this program because that was happening, right? And so again, there are policies that an MSP can go and buy that would cover its downstream risk, but it's a very specific policy. It's specifically created for that purpose. It's going to be much more expensive than just obtaining, risk transfer for their own business. And again, unless it is set up that way as a program, right? Those are called cyber programs. Unless it's set up that way, it's not going to offer any risk transfer for the customers. Okay. So, some of the things we're even doing now to try to help out, like I said, build at scale. So these are things we're having to even address, right? To get in and really make sure we understand, because at the end of the day, we want to offer solutions for everybody. We want to make sure that we're addressing the different segments of our customer base. And obviously the MSP one is strong. And so, again, sophos.com/insurance, that is going to be getting better and better over the next couple of weeks. In fact, we've got a team working on a brand new kind of recharge of it, where it's going to have lots of great information. So we do have good resources that talk about this, right? That talk about, the questions to ask, what to look for. I would say the best thing right now would probably be to go to, your account rep, or get a hold of your account rep, because there's a number of documents that they'll be able to share on this topic. The other thing too, is if you go to the blog, I wrote a blog entry, so the main Sophos blog, I wrote a blog entry about a week ago, 2 weeks ago, that covers some of this. And I think from within that, we link to some of that other material. And so definitely check that out, because it will help you, again, start to think about how to look at this and ask those right questions. And I'll end that answer by saying that, do not assume that do not assume that the MSP cyber policy is going to cover. Confirm that, because in all likelihood it won't, unless they built a specific program to do so. Did I miss any other part of that question, or did that sound like was what they were asking?
Nope,
Yeah?
I think you got it. Yep,
Okay.
thank you.
All right, cool. All right, well, so we've got about 13 minutes left, and we've still got a bunch of stuff. This has been good. It's been very back and forth. So hopefully it's been at least you're learning. But I want to get Greg's piece, give him a chance to kind of talk about some of the solutions. So last thing I'm going to say, and then I'll hand over to Greg, is talking about insurance panels, right? So when you do have a claim, right, the insurance company, in most cases, is going to work just similar to like if you've wrecked your car, right? They're going to have a preferred kind of body shop to go to. That doesn't mean that you cannot take it to a body shop that you want, right? It just means the benefits may be a bit different, or you may have to get approval, right? You may have to give them the quote, and they have to look at it and say, okay, well, yeah, they are, they're not working on stuff that's not related, right? Like if you broke your rear view mirror or side mirror in an accident 3 months ago, and then you got into a fender bender, obviously they're not going to cover that side mirror, with that claim. So similarly, it's going to work that way with cyber, right? So those adjusters are going to want to make sure that if you're engaging Sophos, and we'll talk about rapid response, but if you're engaging us to help, that adjuster just wants to make sure that what we're going to be doing is covered under the policy, and it's also priced competitively, right? So we're not on a lot of panels, right? We're just not. We're still fresh into this. Again, I've said it 3 times, but it's important. We just started this over the summer, so it's going to take a while for us to get to a point where we're on lots and lots of panels. In the meantime, this concept of an off-panel approval is really what we live by, and it works quite well. We're in the high 90% range of getting claims approved for our clients. The key is speed, right? So if you can work with us quick, and we can know that you have that policy, and you can show us what the policy is, we can communicate, with you to the carrier to make sure that we're set up for success, because there's going to be a lot of benefit to use Sophos if you're an existing Sophos customer. I'm going to let Greg get into the rapid response, and we'll revisit this in a moment. But just note that, if you do run into that, hey, Sophos isn't on panel, please note that doesn't mean no. That doesn't mean we can't work together. It just means that we have to put together a response, which doesn't take that long. It's really not that hard. That being said, Greg, I'm gonna kick it over here to where do you want to start? Do you want to just get into some of the solution stuff, kind of right off?
Yeah, let's just jump there, and we'll kind of, I'll abbreviate some things and try to highlight it. So thanks, Nicholas. That was awesome. I think the first point that Nicholas was trying to make when he was talking about the current market is that it's not that right now anyone can get insurance, right? There's actually a significant denial rate for people who want to place a policy. And for those who do want to place a policy and get approved, there are factors that they can leverage to reduce how much they're going to pay in premiums, or it could influence, the overall coverage in the policy itself. Obviously, we have a lot of protection that we can provide here. And I think a lot of you are familiar with our feature set. A couple of points that I want to make, because a lot of the carriers now are talking about advanced protection. And what we mean by that is something beyond endpoint protection in and of itself. So InterceptX Advanced, I think we all know, is a very good endpoint protection product. But just like with ours and other very good endpoint protection products that are out there, you're not going to block everything. There are 2 things that I want to make sure everyone is aware of that we have challenges with today, where folks who have good products still get hit. Number 1, there is human error, right? Ask yourselves honestly, have you ever turned off a protection, or has one of your customers turned off a protection because something wasn't working right, or they talked about performance issues? Or have they added an exclusion? Do you have customers that maybe haven't had their Exchange server patched within hours of a patch being released, or if you're responsible for it, doing the same? Do your RMM or PSA tools require some of those other exclusions or exceptions? My job here is not to tell you you're wrong for doing it. I think that's the reality of the world that we live in, that you have to have those exclusions, or that you have to turn protections off for the sake of speed and doing business. What people are not recognizing, however, is that if you have a good product and you turn those things off, then your attack surface is much wider than what it was before. And you and your clients think that, a lot of your clients think the protection is automated. So we're at a point now where, frankly speaking, endpoint protection is not enough any longer. And there's 2 pathways that you can choose. You can choose to use an EDR or an XDR platform. XDR just means more sources besides your endpoints. But if you're going to choose that route, I'm going to be very explicit here. That means that you have a 24/7 by 365 threat hunting team. That is all they do. Meaning they are trained threat hunters, not just looking at alerts, not doing correlation, ingesting a threat feed. That's all they do 24/7 by 365. MTR obviously is a 24/7 threat hunting service with remediations. Let's move on to the next slide here, Nicholas. This is, I think, where the industry is kind of at an inflection point that a lot, it's been an eye-opening process for me that, insurance carriers have this underwriting process that has up until a couple of years ago been largely paper-based. And they ask questions, do you have endpoint protection? They even ask questions, do you have EDR or XDR? It doesn't actually tell the story of your risk posture at any point in time. You have to have as a foundational piece endpoint protection, and hopefully something that's good, more from an efficiency standpoint. So if we move on to the next slide here, Nicholas, I want to just kind of highlight the fact that there's other gaps. And so one of those human errors or choices that we see is not having multi-factor authentication turned on. So you can have it for Sophos Central. Now it's mandated as well. But there's other tools outside of Sophos product sets where if someone gets a hold of some credentials, that could be their step into the front door of your customer's environment, right? We see these human errors or these choices to not implement what we consider best practice at this point. And people ask the question, well, why didn't you stop the attack? Well, did you patch everything immediately? Did you have everything configured optimally? Did you have MFA turned on everywhere? And you start iterating through all of those decisions that customers made, and that they, I think, a lot of cases declined or didn't resolve issues as quickly as maybe we would like them to do from a security best practice point of view. So let's go ahead and jump ahead to the next slide. My team does intake for incident response. We call our incident response practice rapid response. So if you're not aware of it, whether they're a Sophos customer or not a Sophos customer, we've got a team that's 24/7 by 365 that offers remote incident response services. Now, we've got an incident response guide that Nicholas flashed up here a moment ago. It's a good starting point to answer some basic questions. I think the one thing that I can kind of share with this group here today is not so much what you have to have in place right now. It's good to have an incident response plan, but the majority of customers that we speak with don't have one. And a lot of situations, they are emotionally charged, right? People are worried about their job, whether or not the business is going to be an ongoing concern, their friends, their family, their colleagues. And that's not the time to be making really important decisions, right? So this is a good starting point. I would just share with you, right now, if you have a customer that is getting hit, or you yourselves as an MSP get hit, number one, make sure that you have an internal calling tree, like that you can notify senior management of what to do. Hey, Nicholas, it looks like we stopped. There we go. Number two, don't turn anything off. If you have to do anything, disconnect a network connection. And number three, get your backups off the network as quickly as possible. And then number four, make sure that if the customer has some form of insurance, get the policy in hand. The person who signed the policy is also really helpful because they might have to actually start the claim process as well. So if you have a customer dealing with the incident, start there. Go ahead and get a hold of my team. We actually have an email address. It's just rapidresponse@sophos.com. We also have some phone numbers published. Sarah, if we can just drop the link for the rapid response page in the chat box here as well, that would be fantastic. Let's jump ahead to the next slide here, and I'll try to wrap up, Nicholas. So I think the questions that a lot of people are asking are fantastic, right? We've seen questions about, well, how do I talk about policies with my customers? Who are the carriers? What is it that I'm going to need to do to actually get a policy approved? Right, we're asking a lot of these questions because I think a lot of the customers that we serve traditionally have not had a policy in place, right? And I think we have to start a little bit earlier in the chain. In other words, we should ask everyone now if they have a policy or if they're evaluating getting a policy, because that means that they have a concern that potentially is unaddressed, right? They're asking the question, I'm reading about all this bad stuff. What should I do about it? And they're turning to you because you provide a lot of the services for them for security purposes. That's a good foray into saying, yes, we can help give you guidance on what you should be looking for within a policy. And number two, there are steps that you can take to potentially have a better chance of getting approved for the policy with higher limits and with hopefully lower premiums as a result. And we're happy to share that information. But I would also, say on the back end, I think Nicholas is making the point, one size does not fit all. So we can't necessarily evaluate every single policy, but we'll do our best to give guidance where appropriate. Okay, I am mindful of the fact that we only have a couple of minutes and I still see more questions streaming in here, Sarah. So I think we'll try to, Sarah, if you want to be the moderator and try to bang out as many of these questions as possible, we can try to tackle them as well.
Sure. I'm going to reiterate, please, please, please use the Q&A and not the chat window for sending your questions. Just it'll help us make sure that we answer everybody's. So one of the questions that we have, is there a policy that covers hardware vulnerability exposure by a threat actor?
Hey, Nicholas, can I jump in and take the first part of that? But I think the short answer is policies will cover it. They generally don't make exclusions for it. And they ask during the underwriting process whether or not you patch. But I will tell you candidly, a lot of times a vulnerability is involved in our incident response. It's not the only thing that was exploited, but look, Exchange was really popular to exploit this year with Proxy Shell, Proxy Logon, Hafnium. We've also seen a lot of VPN clients being exploited as well. I think, Nicholas, I guess the question I'm going to throw to you in this context is, if an insurance carrier sees that, when someone filled out their application that they said they patched and did so quickly, but it turns out that they haven't patched a system in quarters or years, could that be grounds for a claim denial?
Yeah, so generally speaking, and there's a bit of a precedence, the vulnerabilities are not a good exclusion. Now, there is one carrier that I know of that explicitly in this last year has made the lack of patching vulnerabilities grounds for exclusion, right? But that's one. Now, similarly, I've had conversations where, with carriers with a head of cyber claims for a very, very large international carrier that said that they don't even care because these things have been taken to the court before and have been discussed. And at the end of the day, the precedent was set that it wasn't a reasonable ask for these entities to stay, these companies to stay on top of myriad patches, right? So, I mean, there's not even that many technologies that are out there that help you track that. Some people may be tracking them in a spreadsheet. There are things you can do, but we haven't quite caught up to that, right? So I would say most of the policies that you're going to find, the overwhelming majority of them, are not going to call out like a specific lack of patching vulnerabilities as a grounds for exclusion. Now, there may be, based on when you get your policy, there may be something in the news that's wreaking havoc. And so they'll say, hey, like, you have to make sure this has been patched for, blah, 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 right? That's a little bit different, right? But if, let's say you do that, and then 6 months down the road, you end up having a claim because an attacker, used a vulnerability that was, 2 or 3 months old and you didn't know about it, the claim's still going to pay in most cases. 9 out of 10, if not more cases, the carrier will pay.
Thank you. So we will be following up with the recording as well as a PDF of the presentation and some of the links, as well as the email for the cyber insurance alias here at Sophos. We appreciate everybody's time. There will also be a survey that's included in the follow-up that helps us to just continue to adapt and change our presentations and provide more things like this that hopefully you guys all find helpful in your business and moving forward. But we appreciate your time and thank you so much. Thank you both, Greg and Nicholas. We appreciate you.
Yes, thank you. Have a great day,
Everyone.
everybody.
Thanks, guys. Take care.